There's not going to be any outright winners that profit from the collapse, but there will be those that have gold and silver. They will have capital when the system reboots, when the bulk, the majority, especially if you agree with the great taking, which I do, because I do believe that that's the plan is to basically take your assets. If you have capital when this thing reboots, your your family will have wealth for generations upon generations.
Are we in a recession? Yes or no? And B, what would a rate cut mean to that discussion? I think that's quite vital to it because it depends on where you stand on the recessionary debate as well.
It depends on whether you're looking at the entire economy or the private sector. The entire economy, they say no, it's not in a recession. If you look at the private economy, I mean, look at here an example: Home Depot. It was their fifth quarter in a row where they had lower revenues, lower profits. That tells you that the housing sector is in a recession. The private sector is in a recession, but don't forget the Treasury is running a $1.5 to $2 trillion deficit. When deficit money is borrowed, it's spent, and when it gets spent, it becomes part of GDP. So while they may be able to say overall GDP is not declining, it's actually growing. The only reason is because the federal government is borrowing. And I think I mentioned just a little bit earlier, this year alone, the US Treasury is going to have to borrow $6 trillion to pay for stuff that's rolling over. In addition to that, they've got another $1.5 trillion or $2 trillion in deficit that they're going to have to fund. So you're looking at $7.5 to $8 trillion that the Fed's going to have to borrow. I again, where's that money going to come from?
Yeah, absolutely. Like we've seen bond auctions, and you mentioned that international and sovereign debt investors are not at the table right now. I just
Right.
saw an article on Zero Hedge. I haven't had really a chance to dive deep into it, but
The 20
the
year.
headline is yield surge after terrible 20-year auction with biggest tail on record, meaning the Fed had to
Right.
pick that up, that tail,
Yep.
as far as I understand. So,
Yes.
what does that mean? Like, where are the buyers, and where did they come from 2 weeks ago when we refinanced about $160 billion, I think.
Well, the foreign buyers, I mean, look at Japan and China. They were the two biggest holders of treasuries. They've been bleeding their treasury holdings down for years. And just look at the BRICS. Why is there such a thing as the union of the BRICS? The whole idea behind it is they want to get out from under the boot of the US dollar. Because they understand that the dollar is strictly a fiat currency. It's a Ponzi scheme. And I mean, if you listen or read any of Putin's speeches, you'll hear him every time say, we want to do business, but the trade that we do, we want to be fair trade and fairly settled. In other words, they want to trade something real for something real, as opposed to something real for something that's nothing. And that's what the deal is. I mean, the U.S. does not. I mean, we have a huge trade deficit because we get products in and we send freely printed dollars back out, and uh, that's why there is a BRICS, because they want to get away from, their view is the danger of holding dollars, and that's one reason why many of these central banks have been buying gold very very strongly for the last 2 or 3 years, because they understand where this goes. They're going to end up with big black holes within their balance sheet that used to be dollars. So they're trying to replace those with uh, something that's real and something that will go up in purchasing power as all these fiat currencies collapse.
Bit of a cheeky follow up question: why is Argentina then joining the U.S. dollar system? Is the peso just that much worse?
Uh, I mean,
Politics.
that's obviously politics plays a part of it. Uh, it's pretty interesting though that Malala is uh, he's a nationalist. Sounds like he does not want to be a globalist, but yet he's hitching his train to the dollar. I mean, the reverse of that. Look at Saudi Arabia. Saudi Arabia has cut deal after deal with Russia and China, and they've come out and they said they will accept other currencies other than dollars, which was a huge change from the 1973 petrodollar. And then going one step further, the United Arab Emirates came out and they said they will not accept, they'll accept foreign currencies, but they will not accept dollars. So, I mean, you got a good part of the world trying to back away from dollars, and they're doing so in their own best interest.
Bill, last time we talked about debt refinancing and debt servicing in particular, about $1 trillion. We're still around that level, a little higher now, of course. And I think it's a good bridge topic as well to talk a bit about the U.S. elections. We're in 2024. We have to bring it up.
If we
Um,
have them,
say
if
again,
we
sorry.
have elections.
Oh, okay. No, you have to elaborate on that. But let's throw that into one question then. Why is that debt servicing topic not being A, more politicized, and B, talked about?
Well, because there's first off, there's no answer to it. I mean, it's a mathematical problem that really cannot be solved. I mean, it's not solvable. Uh, at this point, mathematically, we either default and don't pay, or they print dollars in the trillions to make the payment. Either way, you end up with zero because when all is said and done, that's where the purchasing power of the dollar is going. So, I mean, that's why I think nobody's talking about it on either. You're not seeing the Democrats talk about it. You're not seeing the Republicans talk about it because nobody has an answer. And it's like you stick your head in the sand and hope you don't get your ass blown off.
I think from what I've heard so far, none of the candidates has really released their policies. But from what I hear, it's all about tax cuts and increasing deficit spending. So it's actually the opposite of what they should be doing. So,
Right.
and I think it might be political suicide talking about tightening the belt in the U.S. That's already not feeling that great.
Right.
So interesting. Bill, one of the topics we also need to talk about, we briefly touched on, is the bond yields and how they will develop. Um, Curious what your views are on that as well. I'm guessing, I have a guess what the answer is, but I'm curious what your thoughts are and where do you see the 2 year and the 10 year headed, for example?
Well, you asked before regarding the Fed. If the I don't think the Fed is going to cut rates just on their own. I think they're going to wait for some type of. I think they're going to be forced into making a cut. But when all is said and done, I do believe that the dollar is going to be crashing so badly that the Fed is going to have their hand forced, and they're going to have to tighten rates, have to raise rates as the only way to protect the dollar. So I, I guess my answer is the Fed's in a box because if they lower rates from here, then you're going to kick off just natural dollar weakness, and that will coincide with some type of a negative event, whether it be a bank's going under, uh, you get a slew of real estate foreclosures, big commercial real estate foreclosures. The the Fed will be forced into a cut is my belief, and I also believe that because of the action of the dollar, they're going to be forced into raising rates into a weak economy, which obviously is that's not the policy they would prefer, but it's the policy they're going to have to do. Is they're going to have to raise rates to support the dollar, which again, raising rates on such a hyper indebted system, now now it's a systemic event.
I'm curious if a Fed rate cut is the beginning of the end. Is that would that be sort of the Damocles sword that's sort of hanging over the U.S. dollar? As soon as the Fed starts cutting, the U.S. dollar is done. Is that maybe too extreme, or is that something you would agree with?
If let's say between now and the meeting, they decide we're going to cut rates. I don't think they will, but they decide that they're going to cut rates. You would then see weakness begin in the dollar, and I think that would pretty much push the boat from shore, and it would be all downhill from there. I think you got to keep in mind if they cut rates, you got to wonder. You need to know why did they cut rates? What were there any events ahead of time that forced them to cut rates?
Absolutely. Okay, no, that makes sense, and we really can't predict those because the data is definitely not pointing at a rate cut right now. So at least not the next two sessions. So, Bill, you're a precious metals expert, of course. Writer and of course broker about it as well. So I'm curious the role of gold. Has it changed at all? And I think we need to talk about the recent price move above $2,000 and the new floor that's been established.
I don't think gold has a new role. I think the role of gold is money and everything else is credit. I mean, J.P. Morgan said testified close to those words in Congress. The reason you want to own gold or the reason you want to own silver is because they cannot default. And what we talked about earlier, the world being, or literally the whole world, but led by the U.S., is hyper indebted, and we're moving into the phase, and you're already starting to see it. We're moving into the default phase, and that's why you want to own gold. That's why you want to own silver, because in a world that is defaulting around you, gold nor silver can default. And it goes back to Richard Russell, for years and years and years, said that when it finally blows up and goes down, the one who loses the least will be the winner. There's not going to be any outright winners that profit from the collapse, but there will be those that have gold and silver. They will have capital when the system reboots, when the bulk, the majority, especially if you agree with the great taking, which I do, because I do believe that that's the plan, is to basically take your assets. If you have capital when this thing reboots, your family will have wealth for generations upon generations.
Gold's value will increase. I think we're certain about that. The question is by how much, and will it buy us more, or will it remain at the same level because the U.S. dollar is just so much worse? I think that's a question I want to discuss with you as well.
I think that's an easy one because there is all kinds of leverage in the gold and silver markets, but that leverage is to the short side. And there's leverage, obviously, in the stock market, the bond market, that's on the long side. In other words, borrowed money has been and is being used to prop up stocks, prop up bonds, but it's also being used to suppress the price of gold and silver. And it's done via naked futures contracts on both COMEX and the LBMA. So what that does is that increases the supply, if you will, but it's supply of paper metal. It's not real metal itself. Once once credit breaks, that's when, or once credit is much more difficult to get, that's when you're going to see asset prices declining in vast swaths because the debt has been pulled. On the gold and silver side, the way to close that trade, they're going to be forced to buy, not sell, because they've already sold. So uh, the suppression scheme has been done with naked short contracts.